Good day, traders. This is Mark Lykos once again. I've got another short educational tip for you today that I hope will help you stay in profitable trades longer in your intraday plays. Ever gotten into a good trade, maybe even seen an initial profit, only to get stopped out on a sweep and then watch the play run for a big winner? It happened this morning to a few traders in our trading lab. You'll never avoid all of these, but I've developed an approach that has helped me through the years avoid most of them. My partner called a short play in Netflix this morning, NFLX, with a suggested entry at 56.32. It triggered early in the session and moved quickly for nearly a quarter. Following TradeSight guidelines, we always take an initial profit on a piece of every profitable play. On a stock of this size, we look to risk around 20 cents on an intraday play and take 20 cents for the initial partial. If the trade runs our way for that initial partial, we immediately follow with a stop loss move to minimize our risk and ensure a profitable trade. We never want to take a loss on a winning trade. Here's the short-term intraday chart on the play. This chart illustrates the 56.32 entry that hit with the initial stop loss at 56.52. When the trade hit, it moved fairly quickly for almost a quarter, where we took our initial profit following our guidelines. The question is, where do we move the stop loss now to minimize our risk and ensure a profitable trade? A trader in the lab moved a stop loss after taking his partial just over the entry at 56.35 and unfortunately was stopped out of the trade when it took a bounce off the lows and swept the highs by just 2 cents. One way to avoid this scenario is to use the following guidelines. Guys, you want to take this down. Take the current bid-ask spread plus 2 cents and add that to the original entry value for the after partial stop loss. Most data providers have a market depth window option. Guys, here's a snapshot of my market depth window. Here you can see the difference between the bid-ask spread on this stock was 6 cents. Here's a revised chart illustrating the bid-ask formula guideline. Remember, our lab trader got stopped out at his 56.35 stop loss with a nice intraday partial, but was disappointed he missed the bigger move. By using the bid-ask formula guideline, he would have avoided the sweep and held on to the trade for the more profitable move. In summary of this lesson, guys, our traders were lucky enough to get their partial intraday profit on this trade call. When they did, they noted the current bid-ask spread was 6 cents on the market depth window and simply added 2 cents for the 8 cent guideline. Added that to the original entry for a new after partial stop loss of 56.40 that's still working for some. Again, no rule or guideline will keep you away from getting swept out all the time, but this has helped me through the years stay in the majority of them. I hope this broadens your trading studies. Until next time, this is Mark Lykos bidding you good trading.